Now let's start the another part. Let's start the another part called part 7, sale and lease back. Part 7, sale and lease back. Part 7, sale and lease back. Sale and lease back. Sale and lease back. Part 7, sale and lease back. Sale and lease back. It is very important part. I am expecting a question from this topic, sale and lease back, in the upcoming 2 attempts. Yes, I am expecting this question. I am expecting this question in upcoming 2 attempts. So be ready, and it is quite lengthy and quite tough, considered as tough. Okay, let's start. A sale and lease back transaction involves the sale of an asset and leasing the same asset back. In this situation, seller becomes lessee, buyer becomes lesser. Seller becomes lessee, buyer becomes lesser. Seller becomes lessee, buyer becomes lesser. Buyer becomes lesser. Okay. Like one party who is selling the asset, first of all, to the other party, seller and buyer. The same party who sold the asset is taking the same asset or similar asset back from the buyer on lease. Who is taking the same asset? On lease. Understood or not? This is called sale and lease back. Now I will discuss the logics why this transaction happens. Everything we will discuss one by one. Okay. This is the diagram you must have understood already. Now sale and lease back involves 2 transactions. One is sale of an asset by the seller lessee to the buyer lessor, and the second transaction is a lease transaction. See, as far as the second one is concerned, lease transaction, we have already understood the accounting treatment of lease transaction. In both the books, in the books of lessee, in the books of lessor, we have already understood. Here now we need to understood the basically the accounting treatment of sale transaction. So let's discuss it one by one properly. Now here it is written the purpose of sale and lease back transaction. It is very important. Generally the sale and lease back transaction is occurred to arrange the finance, yes, to the lessee. Seller wants funds to apply in its business. Hence seller first sells the asset to get the funds and then make a lease agreement with the buyer for the same asset so that it can continuously use the asset also in its business. Now try to understand, if I'm in a need of funds, I want some funds for my business, what I should do? I should go to the bank and I apply for the loan. But suppose if bank is not giving me a loan, I am not eligible for the loan. Now what will I do? Maybe I may go to some other third party, other private company, private entity, and I am asking for the funds. When I ask for the funds, just give me the funds, some other corporate entity or another competitor, whatever. I asked for the funds. They said for a security reason, they said to sell my asset to them. They said to sell my asset to them. On selling the asset to them, I will get the proceeds of sale. I will get the funds, and the same asset could be leased back from them for the entire life. Now, what is the reason behind it? What is the reason to sell the asset first? Because security purpose. Suppose if I'm asking for a loan from the third party is saying that they don't believe or they are not actually having enough trust on me. If suppose after some time I may make a default on the repayment of loan, then what should they do? So considering their situation, considering their security reasons, they first asked me to sell my asset to them. By selling the asset to them, I will get the funds, required funds, okay, and also I need the same asset to run my business. So I am asking the same asset from them for lease purpose. Understood or not? For lease purpose. So this is the main idea of sale and lease back. The main idea of sale and lease back is basically to arrange the funds. To arrange the funds. Now the person who is giving you the advance is basically trying to secure himself. Understood or not? So he first purchased the asset from you. He will become the owner. Now whenever you make any kind of default, he has full right to take back his asset because asset has been sold to him. Understood or not? So this is why, this is the reason of sale and lease back. Guys, you have understood the proper purpose of the sale and lease back? Have you understood the proper things? Tell me, have you understood? Have you understood? Okay. Now say a lease back transaction. We have already understood the accounting treatment of lease transaction, but for the sake of convenience, let's understand it again in short, on short only. Seller lessee shall recognize the ROU asset and a lease liability at present value of lease payments, already defined at implicit rate of interest. Here the lease liability is a sort of financial liability since seller lessor got the funds, seller lessee got the funds and assets back. Okay, seller lessee will be here. Okay. Now the second transaction is sale transaction. Now the second transaction is sale transaction, which is very important to understand. The seller lessee and the buyer lessor are required to apply 115. 115? What is 115? 115 is revenue from contracts with customer. That means the revenue is standard. The revenue is standard, revenue from operation. They both are required to apply 115 to determine whether to account for a sale and leaseback transaction as a sale and purchase of an asset. Now see, Indas 116 says that first of all look into the substance of the transaction. It says look into the substance of the transaction. Is it a really sale or it is not really a sale? First of all, identify this transaction of sale and leaseback and try to assess, is it a sale really? Try to find out the substance of the transaction. Is this an actual sale or not? If it is an actual sale, then please apply 115 because 115 says revenue from contracts with customer. That means 115 is basically applicable for sales. It is basically applicable in respect of revenue transactions. So if it is an actual sale, then you have to apply 115. But if it is not an actual sale, you have to assess whether it is sale or not. So if it is actual sale, then apply 115. If it is not an actual sale, then please do not apply 115. Apply something else. As per 115, the sale and purchase can be recognized only when the entity is satisfied a performance obligation by transferring control of an asset. You just need to assess whether it is sale or not. You have to check whether the actual control has been passed on to the buyer. See, I was looking for funds. I am in need of funds, but nobody is ready to give me the funds. So what I did, I actually went to a private entity. I asked them to give me the funds. They told us to sell my asset to them first of all, so that they could be secured, right? So first of all, I sold my asset to them, right? Sold, and because of sale of asset, I got the proceeds, sale proceeds. That means funds. I got funds, but I again need the asset also. So I again went to them and I asked for lease of the same asset for the lifetime. Now try to understand. There can be two cases. There can be two cases. Case one is sale and finance leaseback. Sale and finance leaseback. And the second case could be sale and operating leaseback. Sale and operating leaseback. Guys, if try to understand, in case of sale and finance leaseback, actually the control has not been passed. The control over asset has not been passed to the buyer. Since once first of all I am selling the asset, okay, I transferred the legal title. Then at the same time I am taking back my asset on lease for lifetime. Technically it is a finance lease. So I am taking all the risk and rewards again. So technically look into the substance of the transaction. There is no sale as such. Technically the control is not passed to the buyer. So here we can say control over asset is not passed to buyer. So here we can say that there is no actual sale. Because when I am selling the asset, I am transferring the legal ownership, I am transferring the risk and rewards. But at the same time, I am taking back my asset on finance lease. That means all substantial risk and rewards I am getting again. So technically the control over the asset is not passed. The control over asset is not passed. It is actually it is simply a loan transaction. Technically it is a loan transaction. I should not de-recognize the asset from my books while selling because it is not a sale. It is not a sale. So therefore, sale is not actually occurred here. Hence, asset should not be de-recognized from seller lessee books. Whatever the proceeds seller lessee is getting is treated as a loan liability. Now try to understand this. Please read all the things. Please read all the things and try to write this. Okay, clear? Tell me guys, clear? Tell me guys, clear? Okay, now in case of sale and operating leaseback, we can say, we can assess that yes, here the sale is actually happened. The sale is actually happened because suppose if I am selling my property whose life is 50 years, I am selling my property first of all to someone. I got the funds and I now I am now taking the same property on operating lease. Let us say for 5 years, 6 years, 10 years. The property's original life is 50 years. But I am taking the same property on lease for 5 years, 10 years. It is technically an operating lease. So technically, on selling the asset, I transferred all the substantial risk and rewards, including the ownership. But when I took the asset on lease, I took back the asset on operating lease, I am just getting few risk and rewards. So technically, the substance of the transaction says that yes, here the sale has actually happened, because here along with the ownership, all the risk and rewards has also been transferred, but it has not been again taken back. Understood or not? So yes, here the sale has happened. Here we can say control over asset is passed to buyer. Sale is actually happened. Okay, sale is actually happened. So when the sale is actually happened, what should we do? When the sale is actually happened, what should we do? We will first of all discuss from the book and then again write the further things. Okay, write the further things. Now come here. Thus there are two possibilities in this scenario. Control is passed, control is not passed. Control is passed. If the control of an underlying asset is passed to the buyer, the transaction is accounted for a sale or purchase of the asset and a lease. Yes, when the control is passed, the transaction will be recorded as sale transaction by the seller and purchase transaction by the buyer, and also the lease transaction again. If control is not passed to the buyer lessor, both the seller lessee and buyer lessor account for the transaction as a financing transaction. See guys, financing transaction means loan transaction. No need to record the sale and purchase. Here. No need to record sale purchase in the books of seller, lessee and buyer lessor. No need to record the sale purchase. When the control is not passed, no need to record the sale purchase. Just whatever the funds you got, bank account debit to loan, whatever the funds you have advanced, lesser loan account debit to bank. That's it. It is simply a finance transaction. It is simply a finance transaction. Guys, understood or not? Tell me, beta. Are you getting my point? So here we can say it is sale and operating lease back, and here I can say it is sale and finance lease back. Okay, now let's cover the first point. Transaction in which transfer of an asset is a sale. Matlab operating lease back. When there is an operating lease back. If a transfer of an asset by the seller lessee satisfies the requirement of 1152 to account for sale of asset. Now what to do? What the seller will do, what the buyer will do. what the seller will do, what the buyer will do. Okay, what the seller will do, what the buyer will do. Let's try it out. Let's try it out. First of all, let's discuss the buyer point. The buyer lessor shall account for the purchase of the asset, applying applicable Ind AS, and for the lease, apply lesser accounting requirements of Ind AS 116. See, lessor will have two roles. First, he is the buyer, so he will purchase the asset, he will record the asset. Second role, he is the lessor, so he will apply Ind AS 116 and classify the lease as technically maybe the finance or operating lease. Generally the operating lease, obviously. Classify the lease as operating lease. So lessor will have two roles. Thus, a buyer lessor accounts for the purchase of asset in accordance with other Ind AS based on the nature of the asset. So technically, entry will be asset account debit to bank account. Asset account debit to bank account. Second entry, this is sale, purchase. ठीक है, this is purchase. Second one, operating lease. So lease income to be booked, to be recognized on SLM or any other systematic approach. Any other systematic approach. Any other systematic approach. Clear? Okay. Now, seller lessee. Is it clear? Everyone, is it clear? Buyer lessor is clear or not? Okay. Buyer lessor is clear or not? Buyer lessor is clear or not? Okay, it's clear. Now, as far as seller lessee is concerned, I will not read these points. We will read these points after discussing one example, because there is bit of confusion in seller lessee's accounting treatment. Seller lessee's accounting treatment is bit confused. So what I will do, I will discuss with you one example which is already written here. Just write the example only. Please do not concentrate on solution part. Just write the example only. Just write the example only, please. Write the example only, please. Okay, Jay sold its asset at 10 lakh and leased it back. Carrying amount of the asset is 7,50,000. Life is 20 years. Lease term is 6 years. Now try to understand. What is the life of the asset? 20 years. But I leased it back only for 6 years. So technically it should be sale and operating lease back. And if it is a case of sale and operating lease back, that means I have passed on the control to the buyer. And if I pass on the control to the buyer, then the substance of the transaction says that yes, actually the sale has happened. That means Jay has to record the sale also. At the same time, Jay has to recognize the ROU asset and lease liability also, because Jay has taken the asset back on taken back the asset on lease. And for lessee, there is no different accounting treatments, just like lessor. Lessee has to book the ROU asset and lease liability only, whether it is for 1 year, 1 month, 10 days, 6 years, 20 years, whatever. So, lease rent at the end of each year is 50,000 per annum. Discount rate is 6%. Assume control of the asset is passed by J, seller, to buyer. It is also written that control is passed on. Suppose this line would not have been there, then also we should assume that control is passed on, because considering the life of the asset and considering the lease term, it is being seen that it is an operating lease. Okay. So now, once again, Jay has sold the asset. Jay has to de-recognize the asset. That means Jay has to book the sale. Jay has to book the sale means Jay has to de-recognize the asset. At the same time, Jay has to record the ROU asset now for the 6 years lease term. Understood? So, see, you can use your copy and pen also, because it is just an analysis. But please, first of all, listen and then write. What you guys actually do, first of all, you write and then try to listen. This is not a proper thing. First of all, try to listen to me carefully. Do not write, and then I will give you the time to write this all the things. Believe me. Okay. Now, what is the analysis? The analysis as per the situation is, as per the above situation is, one by one we are discussing the analysis. First of all, since Jay has passed control, Jay de-recognize its asset from books. Understood or not? Jay has passed on the control, na? Jay has passed on the control. So basically, Jay should de-recognize. Jay should de-recognize. Jay should de-recognize its asset from the books. Guys, understood or not? Jay should de-recognize. First point is clear or not? Jay should de-recognize the asset. That means Jay should book the sale. By booking the sale, what should I do? I have to de-recognize the asset from my books. And what is the carrying amount of my asset? The carrying amount of my asset is 750. Next, therefore, Jay has to record gain on sale of asset. Of course, if I am going to de-recognize the asset, if I am going to pass the sale entry of the asset, I have to book the gain also. I have to book the gain also. Guys, understood or not? Second point. Tell me, second point. If I'm selling my asset, if I'm de-recognizing my asset, if it is an actual sale, if the sale is actually happened, I have to book the gain also. I have to book the gain also. Tell me. I have to book the gain also. Understood or not? Second point is also clear. Now, come to the third point. Come to the third point. Come to the third point. Since Jay becomes lessee, Jay becomes lessee, Jay becomes lessee, Jay will recognize ROU asset and lease liability. Yes, third point is also clear. Jay will recognize the ROU asset and lease liability. Understood or not? Third point is also clear. Since Jay becomes the lessee, Jay has to recognize the ROU asset and lease liability simultaneously. Now, if you cover the above 3 points, on the basis of above 3 points, asset to be de-recognized, gain or loss to be recorded, ROU to be recorded, Lease liability to be recorded. Just summarize the 3 points. The original asset of 750 de-recognized, 2 asset. Gain to be recognized, 2 gain. Or if there is a loss, then loss account debit. ROU to be recognized, ROU debit. Lease liability to be recognized, 2 lease liability. Wow. Understood or not? Now, the fourth is important. In this entire transaction, we can conclude that earlier Jay was having 20-year right over the asset. Earlier means before the sale transaction. Earlier means before the sale transaction. Yes, before the sale transaction, the owner of the asset was Jay. And since the asset has total life of 20 years, that means Jay was having 20 years right over the asset. But after the sale and lease back, Jay has retained 6-year right over the asset. Yes, that's very true. That's very true. That means before the sale and lease back transaction was happened, Jay was the proud owner of the asset and Jay was having 20-year right over the asset because the asset useful life was 20 years. But after the sale and lease back transaction happened, asset is still having 20-year life, but now Jay is only having 6-year right over the asset because Jay has taken the asset only for 6 years lease term. Asset is having 20 years useful life, but Jay is having only 6 years right. Tell me, is this clear or not? Guys, my water bottle is missing. Just please, if you want, you can write the above 4 points. Also, if you have already write, you can write the 5th point also. Please do because I need water bottle. So please, you can write it. I'll be back to you. Yes. Shall I continue after 4th one? All the 4 points are clear? Shall I continue after the 4th one? Okay, yes, continue. Now 5th point. 4th point was very important. Try to understand. Jay has transferred 20 years right, but out of which Jay has again taken 6 years right. So overall the conclusion is Jay has actually transferred 14 years right and Jay has retained 6 years right. This is the conclusion we can get from fourth point. So based on the conclusion, now see this. Hence, Jay should recognize only that portion of gain. See, in the second point, we understood that gain has to be recognized because there is a sale. Try to understand here, try to understand. Is there a sale? Yes. Is there a gain? Yes. But can I say that it is a partial sale? Because out of 20 years, I retained 6 years with me and I sold 14 years right. Can I say I sold 14 years right? And out of total gain, I should recognize only that much portion of gain which relates to the transferred portion, that means 14 years. What is written? Jay should recognize only that portion of gain which is actually transferred by Jay, that is 14 years right. See, if you ask me, is this a sale? I will tell you, yes, it is a sale. If you ask me, is there any gain? Yes, there is a gain. But such gain the total gain belongs to total sale. But out of which, how much rights have been retained by Jay? 6 years. So the gain to the extent of 6 years portion of that asset should not be recognized because I haven't transferred that portion. Gain to the extent of transferred portion, that means the 14 years portion, should only be recognized. Understood or not? Fifth point is very technical, but it is based on the fourth one. It is based on the fourth one. When I'm selling the asset, I'm de-recognizing the asset. But at the same time, I'm recognizing the ROU na. So I'm selling the asset, that means 20 years asset is sold. But when I'm recording the ROU, that means again 6 years has been retained. So I'm selling the asset, 20 years gone. I'm taking back the asset as ROU asset for 6 years. So 6 years have come. So net is 14 years. So net sold is 14 years. So gain should be recognized only to the extent of 14 years. Easy, calm down. We will try to understand it through figures also. So please calm down. We are not in a hurry. Don't worry, we are not in a hurry. Just be calm down. I'll discuss it again through some examples. Okay. Okay, now the next point. How many of you haven't understood the fifth point properly? How many of you haven't understood the fifth point properly? How many of you haven't understood the fifth point properly? The logic behind the basic logic behind booking the gain, only partial gain, is In a single transaction, we have two things. First, we sold the entire asset, but second, we get back the asset, the portion of the same asset. So technically, the gain should be recognized only for the transferred portion. Okay. Now, the sixth point. Now, we understood the third point. What was the third point? Since Jai becomes the lessee, so Jai will recognize the ROU asset and lease liability. You understand? Okay. Now, at what amount the ROU asset should be booked? At what amount the ROU asset should be booked? The ROU should be booked from the total carrying value of the sold asset in this proportion, in proportion of present value of lease payment divided by fair value. First of all, before discussing the sixth point, there is a ratio. You need to understand every time. There is a ratio is present value of lease payment divided by fair value of asset. See, this is the ratio. We will use this ratio every time. Okay, we will use this ratio every time. What is the logic of this numerator and denominator? The denominator represents the total value of the sold asset, total fair value of the sold asset. The numerator represents the actual value of lease, So, denominator represents overall value of assets sold, that means 20 years. So, it represents 20-year asset and it represents 6 years lease. 6 years lease. So, the logic is, now come back here. Now, what we will do, ROU to be booked from the existing carrying amount of the asset. What was the existing carrying amount of the asset? The existing carrying amount of the asset is 750. Now, see, you sold the asset, so you have to de-recognize the asset by 750. But out of 750, you get back the asset for 6 years. Once again. Wait. 750 was the carrying value in your books and it represents the total 20-year life. But you sold this asset, so you have to de-recognize the asset by 750 to property, plant and equipment 750. But again, you took back the same asset for 6 years. So what will you do? Out of this 750, how much I should recognize again in the form of ROU? So I will recognize the ROU from 750 only. In which proportion? In the proportion of this ratio. In this ratio. It is like that. If I say the carrying amount is 750, the carrying amount of full asset is 750 and fair value of full asset is 10 lakh. Sir, what is 10 lakh? 10 lakh is this. 10 lakh is this, the sale value. Asset is sold at 10 lakh. So we can consider it as a fair value. The sale is 10 lakh, then the fair value is 10 lakh. Okay, the full value is 10 lakh. Now, suppose if the present value of lease payment, now what is the present value of lease payment? The present value of lease payment is 50,000 per annum at 10%. So 50,000 divided by 1.1, 1, 2, 3, 4, 5. 189,539. So if the present value of lease payment 6 years is 189,540, then what should be the carrying amount of ROU? 6 years asset. Interpolation technique. Interpolation technique. That means 750 multiply by 189, 540 divided by 10 lakh. So what we did, please try to look into this formula. The actual carrying amount of the asset sold was 750. At first instance, you are de-recognizing the 750 because the asset has been gone, the 20-year asset has been gone. But at the same time, you have to recognize the portion of the 750 again. The portion of the 750 again in the form of ROU asset for 6 years. And what and how much portion? It is to be calculated in this proportion, in this ratio. Present value of lease payment divided by fair value. So now tell me, have you understood clearly or not? The logic behind the value of ROU. So the ROU value, wapas, read this once again. Jay will record the ROU asset in its books, then the value of ROU asset will be ROU asset to be recognized, carrying amount into present value of lease payment divided by fair value. Divided by fair value. Oh, it is not 189. Sorry, it's not 189. I made the 5 years, I think. Once again, 50,000 divided by 1.1. 1, 2, 3, 4, 5, 6. 217763. Yes, it is correct. Tell me, is the logic clear to you? So here under sale and lease back, we don't recognize ROU normally. We don't recognize ROU based on the normal provisions of 116. We recognize the ROU based on the proportion of existing carrying amount. Part of existing carrying amount is the ROU. Since this 750 represents 20-year asset, I have to record ROU for 6 years. So I have to record the ROU of 6 years from this 750 only. In this value, in this proportion. Guys, any comment? I am waiting. Except Arya, nobody is commenting. If you are not understanding, then you are open to comment it. Comment on this. Why you guys always why you guys try not to chat? I can't understand. We have to record the gain also na, of 250. Yes, we have to record the gain also, but how much gain? We should first calculate. The overall 250 gain should not be recognized. As per the point number 2, we should record the gain, but as per the point number 5, we should not record the entire gain of 250. Because the entire 250 gain is for 20-year asset. But out of which 6 years have been retained, so we have to record the gain only for 14-year asset. Okay, so how we will record the gain? Let's talk about the gain also. Let's talk about the gain also. Tell me, what is the total gain? What is the total gain? The total gain is 250. The total gain is 250 for 20-year asset. Record gain for 14-year asset only. So how will you record the gain for 20-year asset only? See, there is a total gain of 250. 250 minus 250 minus 250 minus 250 into 217763 divided by 10 lakh. Now what is this? Try to find out the logic. Try to find out the logic. Anybody try to find out the logic behind this. Now what is this? 250 into 217763 divided by 10 lakh. What is this? What is this? Try to find out the logic. 250 was the total gain in respect of 20 years, right? We have to record the gain in respect of 14 years, right? So what I am doing? I am taking 250, 20 years, right? Minus deducting how much gain? I am deducting some portion of the gain. I am deducting some portion of the gain. Please explain it to me. What is the logic and what is this actually? What this calculation represents? What this calculation represents? This calculation represents, should I write or I wait for you? Should I write or wait for you? Apportionment of 6 years gain. Very good, Akash. Akash, you are totally a new student for me. I am surprised. You are watching the lecture since inception of this session, or you have just joined the session in the mid? Because you totally surprised me, Akash. Akash Sibbi. Because since inception, I'm again asking again and again that who is available, anybody else except other than Riza, other than Binu and other than Arya, because I am finding these three students. You should have some basic knowledge, basic what I should say. You should reply on each and everything, yaar. You actually surprised me, and this is the reason why actually I don't like. Let's forget. Choro. Apportionment of 6 years gain. Present value of gain of Jay should be deducting. See, this represent gain on retained portion. Gain on retained portion, that is 6 years. This represent the gain on retained portion. Again, the total gain has been apportioned like this. Again, the total gain has been apportioned like this. The same ratio. I told you, the ratio will be same every year. I just joined from today. But if you have joined from today only, then you must have joined this lecture from the inception, na? Huh? Or you have joined this session in the mid. Because there should be a rule, guys. Whenever we start the class, you should at least reply by good evening, good morning message, so that I should know whoever is available and who is watching my lecture currently. You should have some respect for the faculty, that much. Understood or not? And whenever I ask you, please reply, everyone should reply. Whether or not you are comfortable, or whether or not you have understood the points or not. If you have not understood, if you have some doubt, you can reply even also. So this is the gain on retained portion. So out of total gain, when I deduct the gain on retained portion, ultimately the gain on sold portion will be the gain on 14 years asset only will be recognized. So if I combine all the things together, what will be the journal entry? Now, okay, have you written all the things? Do you want to take some screenshot, or you are done with this? Do you want to take the screenshot? Point number 1, 2, 3, 4, 5 must have been written, if I am not wrong. Tell me, do you want to take the screenshot? See. Take the screenshot first of all. Okay, now come here. We will discuss the journal entries. We will discuss the journal entries, okay? We will discuss the journal entry one by one. So, journal entry in the books of buyer, very simple. Journal entry in the books of buyer. First of all, buyer purchased the asset, asset account debit to bank, purchased the asset at 10 lakh. Simply, buyer purchased the asset at 10 lakh. Second, all other entries depends on the classification of lease. Generally, it will be an operating lease. Right? So, the entries in the books of buyer are simple. Entries in the books of buyer are simple. Okay, taken the screenshot. Taken the screenshot or not? Now, next. In the books of Jay, who is seller, who is lessee. See, first of all, Jay will record ROU asset debit 163, 322. How this 163, 322 arise? Because of this calculation, 163, 322, because of this calculation. So, Jay will recognize ROU asset. Jay will recognize the bank account debit, 10 lakh. Jay got the funds, na? 10 lakh on sale of asset, 10 lakh. Okay, Jay de-recognize the asset has been de-recognized, 750. To lease liability is the present value of lease payment. Present value of lease payment. Now the balancing figure is gain. 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 How much gain? 195,559. 195,559. How this gain has been calculated? See, out of the total gain of 250, if I deduct 54,441, which is gain on retained portion, I will get the balancing figure 195,559, the gain on the sold portion, and the same has been taken as balancing figure, or you can directly calculate the same. It's your choice. If you want, you can write the balancing figure, or if you want, you can calculate first and then write here. For balancing figure, you should have some, the other items should have the correct values. Okay, so this is the entry. Please tell me the entry understood or not. ROU asset has been debited in proportion of carrying value. ROU asset has been debited in proportion of carrying value. Okay. Next, lease liability has been credited with the present value of lease payment. Asset has been credited because the asset has been derecognized, 750. Bank has been debited 10 lakh. Now the gain on sold portion has been credited. Instead of gain, there may be a loss. And loss, if there is a loss, loss will be debited. So please tell me the logic of, have you understood the overall logic? Now please tell me, have you understood the overall logic? Have you understood the overall logic behind this? And if you want to take the screenshot, you can do so. Okay, logic understood or not? Overall logic cleared. With this overall logic, we can come up with some golden rules. We can come up with some golden rules. These are the golden rules. Now first, take the screenshot of the golden rules. Take the screenshot of the golden rules. Okay, now let's understand the golden rules. We always need fair value. Why we need fair value? Because without fair value, we cannot make a ratio. For ratio, we need present value of lease payment divided by fair value. We always need fair value in sale and leaseback transaction. If fair value is not separately given, then assume fair value is equal to actual sale. In our example, we assume the same. Actually, in our example, the sale value was given 10 lakh. The sale value was given 10 lakh. But suppose the fair value is not given, you will assume fair value is equal to sale. Okay. First golden rule. Assume fair value is equal to sale if nothing is mentioned separately. Sometimes fair value can be different, sale can be different. Sometimes fair value can be different, sale can be different. I will discuss these points also. Don't worry. I will discuss those points also. First point is clear. Second golden rule. Recognize ROU asset on the proportionate share of carrying amount of the asset. The second golden rule is always recognize ROU based on the proportionate carrying value. Always recognize ROU on the proportion of carrying value of the asset. This is the second golden rule you should have. Always recognize ROU. Always means always in this transaction, in this sale and leaseback transaction, always recognize ROU in the proportion of carrying values of asset. Recognize gain on sale on proportionate right actually sold. Same. Recognize the gain on the proportionate rights sold. The rights retained, gain should not be booked on the rights retained. Gain should not be booked on the rights retained. This is the golden rule 3. So there are some golden rules. Golden rule number 1, assume fair value is equal to sale if nothing is mentioned separately. Okay. ROU should be recorded in proportion of carrying amount of the total asset. Gain should be recognized in proportion of on a proportionate basis, like on the sold portion of the asset only. Okay. Now for proportion, fair value for the above proportions, ratio will always be this. Present value of lease payment divided by fair value. Present value of lease payment divided by fair value, red color. Now what is here? What is this? Excluding additional finance. Excluding additional finance. If any. What is this? I will discuss it later on. Please do not try to focus on this. Just write this. Excluding additional finance lease if any. Okay. So ratio will always be, proportion will always be present value of lease payment divided by fair value. Present value of lease payment divided by fair value. Always. Always means always. Okay. These are the 4 golden rules. The 5th golden rule is total gain will always be recorded like fair value minus carrying amount. You always calculate the total gain. Total gain will be calculated by deducting carrying amount from fair value. Carrying amount from fair value. Okay. And the 6th, last but not the least, always treat sale at fair value even if fair value is higher or lower than actual sale price. What is this? The 6th golden rule may not have been understood right now because I haven't discussed this point still. So just write the 6th point as golden rule, but I will discuss it later on. So if again you would like to take the screenshot, you can go ahead. Okay, now tell me, understood the maximum golden rules? This was your sale and leaseback. But yes, still few things are pending. Yes, still few things are pending. Still some few things are pending. We'll discuss it one by one because it is very, I consider is a very, even I would like to ask you, how do you like this topic? How will you name this topic? Is it easy, moderate, tough? It cannot be easy. No, it cannot be easy. I can totally say that it cannot be easy. So it has some special place in Indas 116. So technically, what should be done? We should understand it slowly. Okay. If you consider my speed in this topic, the speed was very slow. I was not fast at any moment while discussing this sale and leaseback. It's moderate. Okay. It cannot be easy. So yes, now we understood the same. Now what we are doing? We are taking a break now. The rest points. Acha, you can read. Wait. Yes, you can read this portion, seller lessee portion. Now you can read this portion properly. Now it will be understood to you. You can read this seller lessee portion. Okay, but till here only. Please do not try to read the next part. No. Only try to read this portion. After the table becomes over, do not try to read even, because there are some different other values also. Okay. Okay. So now I am taking a break. Okay. I am taking a break. After the break, we'll discuss the further part tomorrow. After the break, we'll discuss the further part tomorrow. Tomorrow at 10 a.m. I think 10 a.m. is our proper time. 10 a.m. will be the proper fine now again. So 10 a.m. will be the time. Okay. So tomorrow at 10 a.m. Right now taking a break. Thank you so much. Hi guys, welcome back. So how are you all? Yes, I hope you must be fine. Okay, let's continue with the same topic, sale and lease back. Good morning, Sharat, Arya, Riza. Good morning. Good morning to all of you. Okay, so we are discussing currently sale and lease back. Under sale and lease back, what to do? There are two transactions, sale and the lease. As far as lease transaction is concerned, we all know what to do. But as far as sale transaction is concerned, first of all, India says we need to assess whether there is an actual sale or not, whether the sale is happened actually or not. So how to assess whether the sale actually happened or not? The simple is you have to check whether the control over goods and services has been passed on or not. Whether the control over goods and services has been passed on by seller lessee to buyer lessor or not. If the control has not been passed, this is not a sale transaction. This is not a lease back transaction. No sale accounting, no lease accounting. Treat this entire transaction as a loan transaction. Treat the entire transaction as a loan transaction. Binu, good morning. Okay. What about okay, when the control is passed, then what to do? When the control is passed, then what to do? When the control is passed, then what to do? In that case, we can say that yes, the sale is actually happened and we have to recognize the sale. Okay, we have to de-recognize the asset. Understood or not? So we have to de-recognize the asset, sale of asset. Okay. Now, how to identify? By checking the question. Simple. If there is a sale and finance lease back, we can say that control is not passed. Because when we are selling the asset and leasing it back on finance lease, technically the major economic life has been covered in the lease term, then we can say that yes, there is no the control over the goods and services has not been passed. The control over asset has not been passed. Right. But if there is a sale and operating lease back, that means we can say the control over goods, control over assets has been passed on by seller lessee to buyer lessor. Okay. Now under this sale and operating lease back, we have to book the sale. But now what was the rule? What was the golden rule? Okay. What was the golden rule? One second. Okay, what was the golden rule? The golden rules were, like before discussing golden rules, we will discuss some important parts. The golden rule was, see, the seller lessee will simultaneously de-recognize asset at carrying value and recognize the ROU asset. Now, the ROU asset shall be recognized from the carrying of the proportion of carrying amount. In which ratio? What is the ratio? The ratio is present value of lease payment divided by fair value. Present value of lease payment divided by fair value. Right? Can we book gain or loss on sale of asset? Yes, but not the total gain or loss, because that portion of gain which is on the retained ROU part is not to be recognized. The gain on the portion of asset which is transferred is to be recognized. How to calculate the total gain? Fair value minus carrying amount. Then how to record the gain on retained part? Total gain into present value of lease payment divided by fair value. Okay. What will be the journal entry? ROU asset account debit. To lease liability at present value of lease payment. To asset, that is de-recognized asset carrying amount. To gain which was recognized. Bank account debit. Simple. Okay. Good morning. Good morning, Akash. Okay. So this was the overall funda. Based on this, we did a question. We did a question on this. Right. We did a question on this. Based on that, we did a question on this. Now please tell me, have you any doubt? Please tell me, have you any doubt on this? Please tell me, have you any doubt on this? Please tell me, have you any doubt on this? Any doubt you have, if you want to ask me? Any doubt if you want to ask? Even I told you to read this part, seller lessee part, till here. I told you to read this part till here. Let's read this. Let's read this. Have you guys read that? The seller lessee shall measure the ROU asset arising from lease back at the proportion of the previous carrying amount, wow, of the asset that relates to the right of use retained by the seller lessee. This is the proportion. Accordingly, the seller lessee shall recognize only the amount of gain or loss that relates to the rights transferred to the buyer lessor. The gain or loss to be booked on the transferred portion part. So gain or loss, total gain is equal to into present value of lease payment. Gain on, this is gain on retained part. Okay, total gain means fair value minus carrying amount. Thus the seller lessee shall re-recognize the underlying asset, recognize the ROU asset, recognize the lease liability at finance liability at present value of lease payment, recognize the gain or loss, if any, that relates to the right transferred to the buyer lessor. Right? What is the journal entry? The journal entry is this. We have already discussed this journal entry. So I think that is short clear to everyone. This is short clear to everyone. Now there are two different cases. In our example, we have discussed before the break. The sale price was given 10 lakh and we assumed that the fair value is equal to sale. And this is a general assumption, not an issue. We assumed that the sale is equal to fair value or the fair value is equal to sale. We assume that fair value is equal to sale. Even in the golden rules we recorded, I told you that always treat sale at fair value. Or I told you that in the first instance, in the first point, we always need fair value in sale and leaseback transaction. If fair value is not separately given, then assume fair value is equal to sale. Right? This was a basic assumption. But now, what to do? Come here. Now what to do? When the sale price or the present value is less? Is less what? Is less than fair value. Or when the sale price or present value of is greater than fair value. Now here two different cases are there. When the sale price is lower than fair value, that means in the question they have given you the different amount of sale and different amount of fair value. When the sale price is different than fair value, it may be lower than fair value, it may be higher than fair value. In both the cases, we have to understand some additional further points. The basic accounting treatment will be same. The basic accounting treatment will definitely be same. But only few further points need to understand. Few further points need to be understood. Right? Let me check first of all. We do have one example again on this. Okay. Let us take this example. See, this was example number 1. We have already discussed before the break. Now let us write this example. Example number 2. It says, assume same example number 1 with the following additional information. with the following additional information. What is the additional information? Fair value of the asset, 7 lakh, and actual sale is 10 lakh. Actual sale is 10 lakh, but the fair value, market value of the asset is 7 lakh. And the annual lease payments are 1 lakh per annum. So this is the additional info. First of all, please write this example or take the screenshot. Please do write this example. Okay, so this was example number 2, where it is clearly written that we actually sold the asset at 10 lakh, but the market price was 7 lakh. Now, what will be the reason behind this? What will be the reason behind this? Simply, suppose I am in a need of funds of 10 lakh. Now, someone who is ready to provide me the funds is saying that I have to sell my asset. Now, when I'm looking at my asset, the asset's value is not much, or the asset's value is not equal to 10 lakh, but I need extra funds now. I need extra funds. So I requested the buyer that I have an asset, I am ready to sell you this asset, but this asset is having a value of 7 lakh only. But please do give me 10 lakh. Please do give me 10 lakh. I need additional funds from you. See, yesterday, that means in the last in the session which before the break, we already understood the purpose behind sale and leaseback. The ultimate purpose behind sale and leaseback is the arrangement of funds. Okay, so I am in a need of funds. I need the funds, and the funds basically I need higher funds, and the asset's value is lower. Now, what should I do? I don't have any other option. I requested the buyer that, okay, I am ready to sell you my asset, but the asset's fair value is 7 lakh, but please do give me 10 lakh. Understood or not? Simple logic. Please give me the 10 lakh. So that means buyer is providing me additional financing facility of 3 lakh. Now see the solution. Additional financing facility provided to the lessee, that means Jay, 3 lakh rupees. And this is the reason why I have changed my annual lease payment of 1 lakh. Because in the previous example, if you can look into the previous example, our annual lease payment was 50,000. But here, the annual lease payment is 1 lakh. Why? Try to understand. Now, lessor has given me, or the buyer has given me 10 lakh rupees. 7 lakh towards asset, 7 lakh towards asset, and the same asset has been taken by me on lease. So I will pay the lease rent towards 7 lakh asset and additional 3 lakh finance, and I have to repay that finance also. So I have to make two payments. I have to make two payments. One as a lease rent of the asset, and one the repayment of additional finance. And hence these two payments, if we combine them, will become the total payment of 1 lakh per annum. So technically we can say that this 1 lakh per annum of lease payment includes the repayment of additional finance. Guys, before discussing further, tell me, have you understood this thing, or what you want to tell me? Have you? Have you understood the overall scenario? What is going on here? What is going on here? Suppose I am selling my asset of rupees 7 lakh at 10 lakh. Try to understand. Nobody in the market will purchase the asset at 10 lakh. Obviously, I received 10 lakh because I am getting extra 3 lakh as an additional finance. And if I am getting extra 3 lakh as an additional finance, I have to repay the more amount. So this 1 lakh must includes the repayment of additional financing facility. Please tell me, have you understood the issue? Have you understood the issue? Still, I haven't cleared you the accounting treatment. I haven't discussed the accounting treatment, but I am discussing what I have discussed right now. Please understand the situation. If I am receiving higher amount, technically the asset fair value is 7 lakh. But I am receiving the higher amount 10 lakh. I have to repay the higher amount. I have to repay the higher amount. It's a clear thing. Okay. So now what to do? Now try to understand what to do. We know very well that this is the additional finance. 3 lakh. So what we will do? What we will do? Out of 10 lakh, we divide the 10 lakh into two parts. Additional finance 3 lakh and sale 7 lakh. So we divide this actual sale, the sale given, into two parts. Additional finance 3 lakh and the sale part is 7 lakh. Guys, understood or not? Okay. Now, working note number 1. Now, working note number 1. What is working note number 1? Working note number 1 is present value of lease payment. Present value of lease payment. Here it should be 15, not 50. Here it should be 1 lakh. 1 lakh divided by 1.1, 8, 2, 3, 4, 5, 6. 435, 526. Yes, correct. Present value of lease payment. 1 lakh. 1 lakh was the lease payment, but we know very well that this 1 lakh includes the repayment of additional finance. So we first of all we calculated the entire present value of 1 lakh, 1 lakh, 1 lakh, 1 lakh, 1 lakh. But we know very well that this 4,35,000 includes the repayment towards additional finance. So we need to bifurcate. How we should bifurcate? There is a simple call. This is the present value of total payments, and presently we received 3 lakh rupees. So technically out of 4,35,526, which is the present value, we deducted rupees 3 lakh, which is at present we have taken additional finance. So out of 4,35,526, 3 lakh is the finance facility loan repayment, and the rest part is the actually present value of lease rent. Present value of lease rent for 6 years ROU asset. Now have you got my point? What to do? What is the first step? The overall annual lease payment includes the repayment of loan also, additional finance also. So what we did, first of all, we made a present value calculation. The sum of present values of 1 lakh, 1 lakh, 1 lakh, 1 lakh, 1 lakh at 10% for 6 years will be 4,35,526. So this is the present value of overall 1 lakh. We know that the 1 lakh payment includes the repayment of finance of 3 lakh. So out of this, 3 lakh has been deducted. This is the present value figure, and this is also the present value figure. So 3 lakh has been made towards the loan repayment. So the rest part is the present value of lease rent part. Understood or not? So tell me, working note number 1 clear or not? Working note number 1 clear or not? Working note number 1 clear or not? Working note number 1 understood or not? Tell me. Working note number 1 understood or not? Tell me. Okay, understood. So what we did, first of all, we have divided the total present value of lease payment into two parts, the loan repayment and the repayment of lease rent. Now, how to calculate the proportionate ROU? We know already. The ROU will be calculated in proportion of carrying amount. So the carrying amount 750. What is the ratio? The ratio is present value of lease payment divided by fair value. Now, please go back to our golden rule. Please see the golden rule, and in that golden rule, please see the fourth number point. Please see the fourth number point. Now you will be understood. Now you will be understood what is the relevance of this bracket, excluding additional financing if any. Now please read this fourth point to calculate the ROU. When you will calculate the ROU, which should be in proportion of carrying amount 750 into present value of lease payment. What will be the present value of lease payment? The present value of the lease rent, which should be exclusive lease rent only, excluding finance part repayment, excluding that 3 lakh rupees. Divide by fair value of the asset. And what is the fair value? Fair value is the 7 lakh. Fair value is the 7 lakh. So please see this. 750 is the carrying value. 750 is the carrying amount. 135 is the present value of lease rent, and 7 lakh is the fair value. So the ROU should be 1,45,206. The ROU should be 145,206. Tell me, working note number 2 clear or not? 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 Okay. Now, do you get that point? Do you get that point that why we are deducting this additional finance facility? Okay. Now, the third working note. The third working note, which should be the gain, booking of gain. First of all, we should calculate the total gain. What is the total gain? The total gain is 7 lakh minus 750. Oh, here is a loss. No gain. There is a loss. How the loss will come? 7 lakh minus 750. 7 lakh is the fair value minus 750. Sir, why we have taken 7 lakh? Why not 10 lakh? Because the actual sale was sir 10 lakh na. Sir, actual sale was 10 lakh na. Sir, why we have taken 7 lakh to calculate the gain? Logic. Please tell me the logic behind this. Why we have taken 7 lakh sir only? The sale is 10 lakh, then why you have taken 7 lakh only? Why you have taken 7 lakh only? The logic is here. The logic is here. Tell me the logic behind this. Anyone? Yes, very good, Arya. Since out of 10 lakh, 3 lakh is a loan liability. It is not a sale. So how can I book the gain on loan? Okay. So technically the gain or loss should be booked on the amount excluding loan. So fair value minus carrying amount, there is a loss of 50,000. So this is a loss basically. This is a loss. This is a loss. Okay. Now how to calculate the proportionate loss? 50,000 is the total loss into present value of lease liability divided by fair value. This is the formula we always apply. Present value of lease payment, present value of lease rent divided by fair value. So 9680 is the loss on retained part. So 50,000 minus 9680, 40320 is a loss on sold part. Loss on sold part. Loss on sold part. Guys, understood or not? Now tell me, working note number 3 is clear or not? Working note number 3 is clear or not? Hi Govind, how are you beta? I think you were not there yesterday. Am I right? You were not there yesterday. Hello Govind. $4,320 is the proportionate loss on sold part we have to recognize. To be recognized. Yesterday I wasn't well. Not an issue, not an issue. How are you feeling now? How are you feeling now? Now condition is good or not? 40320. Okay. Now see the journal entry. What is the journal entry? The journal entry is we received 10 lakh rupees on the sale of asset. 7 lakh is the actual sale and 3 lakh is the additional finance. The ROE asset should be booked at 145. The ROE asset should be booked at 145. Working note number 2, 145. Okay. Forget about the loss. The asset is de-recognized at carrying amount of 750. The loan is recognized 3 lakh and the lease liability is recognized, which is actually the present value of lease rent. Even you can say this total could be combined. This total could be combined. 3 plus 135. Total मिला के 435. ठीक है ना? This total could be combined. Okay. So now the balancing figure would be loss on sale. Balancing figure would be loss on sale 40320, and what we have calculated is correct. This is the journal entry. This is the journal entry. Guys, tell me, is this okay? There is one more working note pending to be discussed, but not an issue. We'll discuss it later on. But tell me, is this example clear? Is this example cleared or not? Is this example cleared or not? Is this example cleared or not? Very good, very good. Now let's come to the fifth working note, and let's first of all, have you taken the screenshot, or do you want to take the screenshot, or do you want to write? Let's first of all take the screenshot properly. First of all, take the screenshot properly, and then we'll discuss working note number 5. Take the screenshot of entire example. Okay, now let's understand working note number 5. Let's understand working note number 5. See, the annual total lease payment is 1 lakh. It contains repayment of loan, that is the additional financing facility. We know very well. How to bifurcate this annual payment? Basically, every year we are paying 1 lakh, 1 lakh, 1 lakh. So, out of this 1 lakh, how much portion is towards rent and how much portion is towards repayment of loan? Of every year 1 lakh. See, we already bifurcated the gross value, that overall present value 435, out of which overall 3 lakh is the repayment of loan and overall 135 is the overall lease rent. But now we need to bifurcate the every year 1 lakh, 1 lakh, 1 lakh portion. Every year 1 lakh, 1 lakh portion. So annual repayment of rent will be 1 lakh multiplied by 135 divided by 435. Technically 1 lakh, out of 1 lakh, 135 is the present value of lease rent divided by 435 is the total present value. So 3,118 will be the portion of 1 lakh, that is repayment of lease rent, that is the lease rent, and the rest 6,882 is the repayment of loan. Repayment of loan. So the 1 lakh has been subdivided into two parts. Total present value in the denominator portion, numerator portion the present value of specific lease rent. Okay, so this is the working note number 5, how to bifurcate the every year's payment into two portions. Tell me, have you understood this point? Example number 2, have you understood the same? Have you understood the same? Example number 2. Tell me guys, have you understood the same? Overall example number 2 is clear or not? Overall example number 2 is clear or not? Under the example number 2, the fair value was lower, the sale value was higher. Why? The higher portion was the additional finance. To calculate ROU, to calculate proportionate gain, take present value of lease rent only, excluding finance. Excluding finance. Okay. Now take another example we have. Take another example. Now please see what is different in this example. What is different in this example? Please see what is different in this example. What is different in this example? Here in this example, the fair value is higher than sales. Okay. The asset I have is having a high value, but I know I don't need that much loan. Suppose I require just 10 lakh rupees of arrangements. I want to arrange 10 lakh rupees of funds. Now when I went to a lender, I asked him to lend to give me the money. He told me to sell my asset. When I look back to my asset is having a value of 12 lakh. I told him that my asset value is 12 lakh, but I need only 10 lakh. He said, oh, not an issue. Not an issue. Just give me the asset of 12 lakh. I will give you 10 lakh. I said, 2 lakh is my loss, dear. He said, not an issue. Just give me the lower lease rent. Just give me the lower lease rent. Basically, when I am selling my higher value asset, at lower value actually, lesser will charge me the lower lease rent technically. Lesser will charge me the lower lease rent. There is no additional finance here. Lesser will charge me the lower lease rent. Understood or not? Guys, understood or not? We took the example number 1, same. In that example number 1, the original annual lease payment were 50,000, not 1 lakh. 1 lakh was the example number 2. Okay. So we took example number 1 same, but here the fair value is 12 lakh and the sale value is 10 lakh. Okay, same, one by one, same. See, I just need 10 lakh of funds, but as far as asset is concerned, I sold my asset to the party whose actual fair value is 12 lakh. What I should do? I have only one asset here. I don't have any other option. I have to sold my higher value asset to get the lower funds. Not an issue. When I am selling my higher value asset to get the lower funds, the lease rent would be charged, the lower lease rent will be charged. Understood or not? So, what is the working note? First of all, working note number 1, present value of lease payment of 50,000 per month per annum. So, 50,000 divided by 1.1, 1, 2, 3, 4, 5, 6 GT, 217763. So, this is the present value of lease payment. Yes, it doesn't include any additional finance. No. This is not a case of additional finance. Okay. Now, how to calculate the proportionate ROU? How to calculate the proportionate ROU? The proportionate ROU will be on the proportion of carrying amount. So, this is the carrying amount. This is the carrying amount. Technically, this is the carrying amount. Okay. This is the carrying amount. And technically, this 50,000 is a lower rent. Lower rent compared to market. Why lower rent compared to market? Because I sold my higher value asset to him. I gave him a benefit of 2 lakh extra. Now he is giving me the benefit of lower lease rent. Simple. So it is actually not reflecting the market lease rent. It is not reflecting the market lease rent. This 50,000 is not reflecting the market lease rent. Understood or not? So when I'm calculating the proportionate ROU, the ROU at the proportionate basis, the carrying amount multiplied by 217763, but technically 217763 is the present value of lower lease rent, which is not at the market, divided by the fair value. Fair value is the market value. We got 136. We got 136,102. Then we added 2 lakh rupees separately here. Now you will ask me, sir, why we added 2 lakh rupees? Why we added 2 lakh rupees? Try to understand. Actually, when we calculated the present value, that is 217763, this present value is the present value of this 50,000. And this 50,000 is not the market rent. It is the rent lower than the market rent. So this 50,000 doesn't reflect the market value. So technically the base is not clear. Here when we are applying the formula, the base is not clear. When we are applying the formula 750 into 217,763 divided by 12 lakh. See, this 12 lakh is the market value. But this 217 is not a market value. It is not a market value. Actually, this is not a market value. What should we do? Okay, not an issue. Whatever we got, that is 136,102. We will further increase our asset, ROU asset by 2 lakh. We will further increase our ROU asset by 2 lakh. How? Why we are increasing our market ROU asset? Because when we say that, okay, I gave you my higher value asset and you are charging me lower rent. So technically, I am also getting benefit by paying the lower rent. Technically, I am using the asset for 6 years now. I will use the asset for 6 years now. I got the ROU. I got the ROU for 6 years. But actually against that ROU, I am paying lower rent of 136. But my ROU's value should not be 136. It should be more than that. See, I'm trying again. Okay, I am trying again. Try to understand. See, whenever we record ROU reflects what? Try to understand. ROU reflects what? Generally, ROU reflects the present value of lease payments. Generally, na. Here, the ROU if I am recording the ROU at 136, that means it reflects the present value of lease payment, that is 136. But technically, what I'm getting in the form of ROU, that is for which ROU I should pay extra lease rent. I should pay the market lease rent, which I am not paying. So technically, I am getting benefit. So I should record my ROU at fair price. I should record my ROU at fair price. Technically, the fair price of ROU, the fair price of ROU should be 336,102. The fair price of ROU should be 336,102. This is what we call fair price of ROU. Suppose if you are not adding the 2 lakh rupees to this 136, if you are recording 136 only in the ROU, this reflects the present value of lease rent, which is lower than the market value. Our ROU should be recorded at the fair price. See, when I am giving benefit to the buyer by selling him higher value asset and getting lower value, now the buyer's responsibility is to give me the benefit by charging lower rent. Okay, now what benefit I got? I have to pay lower rent. If I am paying lower rent, that doesn't mean that ROU should be recorded at the lower value. No. ROU should be recorded at the fair value. ROU should be recorded at the fair price. So if I am paying lower rent, that doesn't mean the ROU should be recorded at the same lower rent. No. It's not like that. It's not fair actually. See, when I am getting the 6 years right over asset, technically the 6 years right over asset doesn't reflect 136 value. Actually, I am getting more benefit and paying less. So I am recording the proper value of ROU. Have you understood this or not? Please tell me. Have you understood this or not? Please tell me. Have you understood this or not? Okay. Okay. So when you calculate the ROU, apply the same step, but just add 2 lakh rupees. Just add 2 lakh rupees so that you will get the fair price of ROU. Understood, but can you please the reason behind? The reason was clear, na? I initially told you the reason. See, suppose if I need funds, suppose Binu, I need funds and I know that Binu has the required funds and Binu can help me. Okay. I came to you I asked you that Binu, I need funds of rupees 10 lakh. So Binu told that, sir, I don't believe, I don't trust you. I don't trust you. Let's first sell your asset to me. Let's first sell your asset to me so that I become the owner of that asset and take the same asset back to you as on a lease basis. Use that asset. I actually don't have any interest in your asset. What I want, just a security. So, okay, I look into my assets. I find my one of the asset, which I can sell it to you. But the problem is that asset's fair value is much higher than what I required as a loan. I required just 10 lakh rupees, but the asset whose fair value is 12 lakh. But I don't have any other option. I don't have any other assets to sell you, frankly speaking. So I decided to sell this asset whose fair value is higher. See, I don't have any other option. I don't have any other choice. So what I decided to sell this higher fair value asset to you. Higher fair value asset to you. And I told you that, Binu, please don't give me 12 lakh against this. No. Just give me 10 lakh. See, by selling the asset of 12 lakh, you are ready to pay me the 12 lakh proper value. But I am telling you, Binu, please, just pay me the 10 lakh rupees. So technically, it is a benefit for Binu of rupees 2 lakh. Now I am saying, Binu, just pay me the 10 lakh rupees and do me a favor. Just give me the 10 lakh rupees only against this 12 lakh asset. You have an advantage of 2 lakh. But now do me a favor. When you charge me against this lease rent, when you charge me, please charge me the lower amount because I am giving you the benefit. Now pass the benefit same to me. This is the reason behind this. This is the reason behind this. Simple. Simple. This is the reason behind it. Now tell me, have you understood the same? Have you understood the same? Have you understood the same? Okay, let's move on. Guys, please write, please do write or do take the screenshot overall, and then we'll discuss the remaining part also. Yes. No, Binu. Now when I asked you to do me a favor, actually the lease rent could be more than 50,000, but you charged me just 50,000. Actually the lease rent, market lease rent could be more than 50,000. I written here, but you charged me just 50,000. You charged me just 50,000. Actually the lease rent should be higher than 50,000, but you charged me lower. You charged me just 50,000. Okay. Now please, first of all, overall take the screenshot and then we'll discuss the further part. Okay, so now we calculated ROU. Now calculate the gain. How to calculate total gain? Total gain will be 12 lakh is the 12 is the fair value. Actual, the asset should have been sold at 12 lakh only. Minus 750, the gain should be 450. Now out of 450, two parts should be there. One part gain on retained portion, gain on the second part gain on sold portion. So the gain on retained portion 450 into 217763 divided by 120. And the gain balance gain to be recognized on the sold portion. Okay, the journal entry is bank account debit. We got only 10 lakh. Okay, ROU asset account debit 336102, the fair price. The fair price. To asset, this is the carrying value. Lease liability, this is present value. And gain 368339. Cool. That was it. That's it. Correct? That's it. Now we understood all the situations properly. Come here to read the points. Come here to read the points. When the sale price or the present value is less than the fair value. When the sale price is less than the underlying asset's fair value. The present value of the lease payment is less than the present value of market lease rent. Yes. We got lower value of sale, value on sale, and will pay lower amount through lease payment, also called lease prepayments. A seller lessee recognize the difference as an increase to the sale price and initial measurement of the ROU asset as a lease prepayment. In simple terms, ROU asset shall be increased by the difference amount. ROU amount shall be increased by the difference amount. Example number 3. In simple terms, the difference amount of 2 lakh shall be added to the ROU asset. Here, when the sale price is higher than the fair value, when the sale price is greater than the underlying asset's fair value or the present value of lease payment is greater, we got higher amount on sale and will pay higher amount through lease payment, also known as additional financing. A seller recognizes the difference as reduction in the sale price and an additional financing. Here the total amount of annual consideration lease payment to be payable by the lessee and receivable shall be bifurcated into two parts. If you can remember the working note number 5. Real lease payment per annum and repayment of excess funding to the buyer. Real lease payment is total present value of lease payment minus additional financing divided by present value factor. So that was it. That is it. Okay. So these are the examples. I personally believe that by looking into example number 1, example number 2, example number 3, you should give yourself 5 minutes. I personally believe, because this is a very interesting as well as tough part of Indas 116. So I personally believe that you should give yourself, right now you should give yourself 5 minutes just to see, just to analyze example number 1, example number 2 and example number 3. And always try to write your own notes. In short, try to write your own notes. Try to find out your own shortcuts. It will help you definitely. So I am giving you 5 minutes. To assess the entire situation. Like example number 1, what we did, example number 2, what we did, example number 3. And try to assess what was the actual difference, where I need to do what, Everything, please look into the example number 1, 2, 3. I am giving you 5 minutes. I will be back after 5 minutes and then we'll discuss the further one more transaction, one more point that is remaining, that is called sale and finance leaseback, where the control is not passed on. We have one more example on that, but we will do this example after your 5 minutes analysis. Okay, so just do the 5 minutes analysis once again. Just do the 5 minutes analysis once again by looking into example number 1, 2, 3. All the three situations. Situation number 1, when the sale price and fair value is same. Situation number 2, when the sale price is higher than fair value, because we need higher funds, additional finance. Situation number 3, when the sale price is lower than fair value, we need lower funds, but we have to sell our higher value asset. Okay, all the situations please analyze one by one, then we'll discuss further things. Okay, giving you 5 minutes. Yes. So guys, have you analyzed the entire things? And I just wanted to ask you, if you have any kind of issue right now regarding sale and lease back, then you guys can ask me. I gave you 5 minutes. Why? Just to see, a teacher's work is to guide. of course, but it's ultimately upon the student who should understand, who should make his own notes, who should make his own concepts strong. It's student's responsibility. So I gave you 5 minutes to analyze the entire situation. Now, here is the last thing. If I can say sale and a finance lease back, or there's a sale but actually the sale has not happened since the control is not passed on. Since the control is not passed on, right? The sale is not happened, the control is not passed on. The control is not passed on. Understood? Do you understood this? The control is not passed on. The control is not passed on. Okay? Actually, there is no sale, not a sale. Example, sale and finance lease back. In that case, what to do? Technically, when there is no sale, buyer will not record the purchase, seller will not record the sale. So, buyer has given me the funds. Buyer will record this advance to the party and seller will record as loan from a party. Simple. How? Let's discuss one example first of all and we'll read the things thereafter. Let's discuss the example. Let's discuss the example. You can write the example number 4. Vishal sir sold its asset to Jay sir at 1 crore. At 1 crore. Vishal sir sold its asset to Jay sir at 1 crore rupees. At 1 crore rupees. Carrying amount in the books of Vishal sir is 85 lakhs. Okay. Asset is leased back by Vishal sir immediately as on a finance lease term. Okay. So technically, Vishal sir sold its asset to Jay at 1 crore. The carrying amount of asset in the books of Vishal sir was 85. But as soon as the asset is sold, the same asset has been taken back on finance lease by Vishal sir. Technically, the control is not passed on to Jay. The control is not passed on to Jay. Now, the lease payment is 7 lakh per annum to be paid in 20 years useful life. Now, why this entire thing happened? Because suppose Vishal sir needs funds. Suppose, okay, Vishal sir needs funds. It is a hypothetical example. So, lease payment is 7 lakh per annum to be paid in 20-year useful life of the asset, 20 year. The lease term is 20 year, the useful life of the asset is 20 year. Okay, discount rate is 5%. So, now what to do? So, what to do? Books of Vishal sir, books of Jay sir. If we take books of Vishal sir, what to do? Vishal sir has got 1 crore from Jay sir, bank account debit, 2 loan from Jay sir, 1 crore. Vishal sir will make the following journal entry. Vishal sir is basically the borrower. Vishal sir is a borrower. Bank account debit to loan from Jay. Books of Jay sir. Jay sir is lender. Basically, Jay sir is lender. Loan to Vishal sir account debit to bank, 1 crore. Now simply, the loan account is to be prepared in the books of Vishal sir or in the books of Jay sir. When loan is to be prepared in the books of Vishal sir, that means this is a liability. This is a loan liability. We recorded the loan at 1 crore, we charged the interest by 5%, we paid 7 lakh as the repayment, the remaining value is 28 lakhs. Simple. This is the simple example we have. I think anyone can understand, even the CA foundation student can also understand. Please take a screenshot or do write this. Okay, it's done. Now, let's do one question. Let's discuss one question. Let's discuss one question. Illustration number 27. Come here, guys. Illustration number 27. And please be active, be ready to explain. Okay? Be active, be ready to explain. I will ask you some points on this. An entity seller lessee sells a building to another entity buyer lessor for a cash of rupees 30 lakh. So basically sale value 30 lakh. Immediately before the transaction, the building is carried at a cost of 15 lakh. Okay. So the carrying amount is 15 lakh. At the same time, the seller lessee enter into a contract with the buyer for right to use the building for 20 years with an annual payment of 2 lakh payable at the end of each year. Okay. Annual payments 2 lakh per annum. Okay. At end. The terms and conditions of the transaction are such that the transfer of the building by seller satisfies the requirement of determining when a performance obligation is satisfied in Ind AS 115. That means it says that the control is passed on. Okay. Control is passed by seller. The fair value of the building at the date of sale is 27 lakh. Oh my God. Now sale is 30 lakh. The fair value is 27 lakh. Now I am asking you, I told you that I would ask you the question. Now I am asking you what to do. Which situation is this? Which situation is this? Implicit rate of interest 12%. Okay. The discount rate is 12%. The discount rate is 12%. The discount rate is 12%. Okay. Now I am asking you, tell me which situation is this? Which situation is this? Govind is saying example 2. Govind, please elaborate. Don't use code language. Example 2. Please elaborate. Additional finance. Arya, very good. Loan. Akash, very good. Loan liability. Binu, very good. So, out of 30 lakhs, 3 lakhs is additional financing. 27 lakhs is sale. Very good Sharad, very good Govind, Riza, very good. Okay. Buyer lessor classifies the lease of building as an operating lease. How should the said transaction be accounted by seller lessee and buyer lessor? Okay. Now, we'll solve this question together, don't worry. But your part, your responsibility will be higher, my responsibility will be lower. I will ask you each and every step, what to do now, what to do now, what to do now. Okay? So now let's start. Let's start. Tell me, this is all about the information you have. If you want to take the screenshot, you can. This is all about the information you have. Okay? Okay. Now here, please write the books of seller lessee. Now tell me, which working note should I prepare? Tell me, which first working note should I prepare? What should I do? Please tell me. Apply your mind. Do not try to copy from the previous examples. Do not try to copy. Apply your mind properly. Apply your mind. I could have given the homework, but I am not giving this question as a homework so that you can make a practice with the teacher. Okay. So, apply your mind. Do not copy, and please tell me which first working note should be created, should be prepared. It's your responsibility. My responsibility to rectify you, to correct you wherever you are wrong. And my responsibility is to write on this whiteboard. Riza is saying present value of lease payment. Very good, Lisa. Very good, bete. Arya, present value of lease payment. So, present value of all annual payments. So, the present value of all annual payments are 2 lakh, present value of 2 lakh per annum at 12% for how many years? How many years are given? I can't see. How many years are given? $20 years. $20 years. For 20 years. Okay, please calculate. Give me the answer. 2 lakh, na? It's 2 lakh, na? Yes. Please give me the answer. Please give me the answer. Present value of all annual payments. 7,46,000. No, Binu, it's wrong. It's wrong. It's wrong. You have done 1 lakh. It's 2 lakh, beta. It's 2 lakh. Binu, it's 2 lakh every year. You have done 1 lakh. Or it's 12%, 20 years. So it's something around 14,94,000 approx. 14,94,000, 14,93,888. Technically 14,94,000 approx. Now what will you do? Now what to do with 14,94,000? Do we need to bifurcate this? Tell me what to do with this 14,94,000. What to do with this 14,94,000? Acha, present value annuity factors 7.46. Okay. What to do with this 14,94,000? What to do this with this 14 lakh? You guys are very slow, yaar. You guys are very slow. You guys are very slow. Please give me 1 minute just to. There's a screen issue, or just to settle the screen issue. Yes, tell me. Now what to do? Bifurcate. Bifurcate. Loan. Additional finance. 3 lakh. 1194. present value of lease rent. Okay, this is your working note number 1. Now tell me what to do. What is your second working note? I will not help you. I can rectify your mistakes. I will rectify your mistakes. I will correct you. I will write on a board, but you have to apply your mind. Okay? Please tell me. Working note number 2. Please tell me. Working note number 2, 1194. Lease rent. Okay. Now please tell me. Working note number 2. What should be done now? What should be done now? Yes. ROU. Proportion of carrying amount. So, no. Please tell me the figures. Please tell me the figures. I was taking 7,50,000. That was based on example number 1, 2, 3. So, please tell me the figures. How to calculate ROU asset? Please tell me the figures. All the figures are written over here. Carrying value. We might need carrying value. We might need fair value. Tell me, what figures should I use? What figures should I use? What figures should I use? It's 15 lakhs. It's 15 lakhs into. See guys, you are giving me full answer. I don't need your full answer. I need the all figures. What figure should be considered? I need the figures. Your answer may be correct, but you need to give me full figures. What figures we should consider? Yes, very good, Riza. 15 multiplied by 11.4 into 27. 1194 divided by 27 lakhs. So here it is 663,333. 663,333. The proportionate ROU asset will be this. We taken 1194 as present value of lease rent only because the rest is the additional finance part. Okay, wow. Okay, the next portion. The next one. Working note number 3. Working note number 3. Working note number 3. Working note number 3. Which working note should I prepare now? Which working note should be prepared now? Working note number 3. Working note number 3. Gain to be recognized. Very, very good. Very good all. Tell me. First of all, calculate the total gain. Tell me, what is the total gain? The total gain could be 27 minus 15. The total gain would be 12 lakh. Simply because 3 lakh is the additional finance, we cannot consider 3 lakh as a part of gain. Now, gain on retained ROU part 12 lakh multiply by 12 lakh multiply what the figures will be there? Simple, it should be 11.94 divided by 27, right? It should be 530,667. So net gain to be recognized. $669,333. 669,333. Okay. Now tell me the journal entries. Tell me the journal entries. Not entries, entry. Tell me the journal entry. Tell me the journal entry. Tell me the journal entry. See, we are doing books of seller lessee, right? We are doing books of seller lessee. Journal entry. Very good, Riza. Bank account debit 30 lakh. Very good. Very good, Govind. ROU asset account debit. Very good. To building. Very good. Very good. To building 15 lakhs. Very good. To financial liability, that is a loan. That is a loan. 3 lakh. Very good. To lease liability, Govind, you have not written lease liability. Acha, finance liability 1494. Okay, okay, not an issue. To lease liability 1194 and to gain, that is charged to P&L 669 333. Okay. Okay. That's great. That's very great. The last working note is to bifurcate the annual payments. Bifurcate the annual payments. Into, tell me, how to bifurcate. How to bifurcate. $11.94 divided by 14.94. It should be 1598. Sorry. It should be 40,161. $159,839. Okay, that's great, that's great. Now, books of buyer, lesser. Tell me the journal entry. Books of buyer, lesser. Tell me the journal entry. Books of buyer, lesser. Tell me the journal entry. The control is passed on. Purchase entry. EP account debit 27 lakh. This was the correct entry, right? Anna? Tell me. Hello, hello, hello. Yes. Building account debited at fair value. Right. Loan to seller. To bank account 30 lakh. Basically, loan to seller account will be recorded like to bank 3 lakh, to finance income at 12%. 36 by bank. First installment. Tell me the amount of installment here. Tell me the amount of installment here. Tell me the amount of installment here. We have already prepared a working note for this. My God. Tell me the amount of bank, yaar. See, this was the repayment value 40,161 towards repayment of loan. 40,161. Very good, Riza. Today Riza is performing very well. 40,161 by balance. $295,839. ठीक है. So books of buyer are like this. Books of buyer are like this. Okay. Anybody? Do you have any question on this? Illustration number 27. Done. Wow. मजा आ गया. Guys, now I can say, I am very happy to let you know that we have almost completed our Indas 116. Yes, we have one more part which is remaining, transition approach, but it is not actually relevant for the exams because it is relevant to, it is basically becomes a history now. Yes, we will discuss this again, this also in our next class. So what is the target of our next class? Next class will be the last class of Indas 116. Next class will be the last class of Indas 116. In the next class, we will cover up the remaining portions. We'll cover up the remaining portion. ठीक है ना? And in the next class, we'll discuss all the remaining pending questions of Indas 116 from questionnaire. So we have a total 23 questions from questionnaire. but we have already covered, I think, quite 15 to 16 questions have been covered already. So next class would be the last class, right? Next class would be the last class of Indas 116, and what we will do, we will complete all the things, all the pending things from Indas 116, whether it is concept book, whether it is questionnaire, right? Whether it is concept book, whether it is questionnaire. Okay, do tell me one thing, have you got the part C? Have you got your part C of concept book and questionnaire? Guys, have you got your part C of questionnaire and concept book? See, in the first shipment earlier, you must have got part A and part B, right? You must have got the part A and part B. Now, have you got part C or not? Akash, received. Sharad, no. No sir, not yet. Guys, please please log in your details in the vSmart portal you have. Log in and just track the shipment for part C. Track the shipment for part C, guys. Okay. Have to go and collect. Very good. Very good. That's great. Okay. That means soon you will receive your part C. Okay, not an issue. Soon you will receive your part C. Very good. Okay, guys. So now I am concluding today's session. In the next session, next session everything will be completed as far as 116 is concerned. Next session would be and it will take around 3 years properly to cover up all the things. Maybe less than 3 years, but not more than 3 years. So yes, we are about to cover up 116. 116 is taking its last breath. Okay. Okay. Now let me go. Let me conclude this session for now. After 116 will become over, we'll start Indas. We will have Indas. Yes, we'll start Indas 23 or Indas 36. We'll start Indas 23 or Indas 36. I'll discuss with you. Okay. Chalo. Thank you so much, guys. Thank you so much. Bye bye. Jai Mata Di. Allah Hafiz. Take care.